It's green across the screen. The Nifty as well as the Sensex, they end higher but off the day's high. Energy and realty lead the gains, while FMCG and consumer durables lag. The mid-caps underperform.
Reliance soars 4% after Goldman Sachs bets big on the stock, reiterates a buy rating, raises target price to 3,400 rupees per share from 2,495.
Aster DM slumps nearly 8% after close to 10% equity change hands in a large trade, while CDSL falls as equity worth 1,200 crore rupees change hands. But Angel One rallies after sources say that it's looking to raise 1,500 crore rupees via the QIP route.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points and gear you up for the next trading day. I'm Reema Tendulkar and with me is Nigel D'Souza. Hi, Nigel.
Well, Reema, we've got plenty to cover in the next 20 minutes or so. We'll tell you what all went on during the trading session, all the big news, the key developments on the Wall Street. We'll also give you the top corporate voices and events you need to track. But let's kickstart the show with the day's market action. Well, it was a day for large caps, large cap heavy day, so to call it. And it was led by the biggest stock on the Nifty, that's Reliance Industries. That's close to around 10.2, 10.3% weightage. That's the second behind HDFC Bank. But that one, in fact, did very, very well in today's trading session. And bulk of today's gains were accounted for by Reliance Industries. The Nifty Bank, if you pull up the intraday chart, you'll see that it came to life, particularly in the final hour of trade on the final 30 minutes. It played out the weekly expiry. So the intraday chart tells you the picture. Till the last hour of trade, it was actually underperforming. But that late dash that it saw, well, it became a bit of an outperformer towards the end of it. So that's the expiry-related factor. And, volumes are not very, very high, given that it's a truncated peak. But in the cash market, various stocks, they did well, and they did well on large volumes. And some of these brokerage notes seem to be firing up the stocks. Whether it was, you had InfoEdge, you had Gravita, and ABB. All of them ended with gains of around 5 to around 7%. They were fired up by big brokerage bets. Reema.
Well, the disappointing bit was the mid-cap performance, right?
Sure.
The mid-cap index slipped about 300 points from the day's high to end absolutely flat, just 29 points up. And that fall came through just in the last 1 hour of trade. Even the advanced decline ratio, when we started trade, it was all mid-caps. The advanced decline ratio was well in favor of the advancing side. The lines crisscrossed, and by the close, you had more stocks ending in the red compared to the stocks in the green. That said, the small cap index did manage to clock in some gains, and the Nifty small cap index had a gain of close to about 1%. Sectorally, while banks did well, energy, realty closed higher, PSU banks and IT, that's where a bulk of the selling pressure came through. The Nifty PSU banking index down 1%, while the Nifty IT index was down 0.6%. But here's a lineup of what we have for you in store today on our show. We start with the top movers and shakers of the day. Vivek joins in. The stock of the day is Reliance. The stock gains on the back of a bullish brokerage note from Goldman Sachs. We get you the key highlights. Last but not the least, we delve into the key market events to watch out for. But first, to the movers and shakers of the day, Vivek is at the big wall with that list. Vivek.
Well, thank you so much for that. Lot of stocks today moving on the back of brokerage calls, like you mentioned at the start of the show. But, none bigger than Reliance Industries, top gainer as far as the Nifty is concerned. That particular stock up over 3.5%. Goldman Sachs, increased the target price, maintained the buy call, and in fact, sees a 54% upside in its bull case scenario, even from the current levels. The next stock, the other one that you mentioned was ABB India. UBS continues to see even more further upside to consensus margins, describes the multiple upgrades that have come in. So another stock that did quite well on the back of brokerage call. The next set of stocks are from the pharma pack. The first stock was Sanofi. The company, along with Cipla, announced an exclusive distribution partnership. And on the back of that, Sanofi today ended 3.5% higher. And Vocard, the company went ahead and informed that it had completed the fundraise via the QIP route. A whole host of mutual funds and some marquee investors came in there. The stock ended at the upper circuit. The next stock was InfoEdge. ICICI Securities went ahead and increased the target price. They now see some upside as far as the IT hiring is concerned, and on the back of that, the stock ended almost 5% higher. Gravita India, something, Nigel, that you pointed out earlier today morning. Kotak Institutional Equity, initiated a buy coverage on the stock. They see significant upside even from the current levels. The next set of stocks, of course, was from the wind energy. Inox Wind is the one that we're focusing. brokerage house Anand Rathi initiated coverage on the stock. They believe that the sector is poised for a turnaround, despite the fact that there continues to remain some headwinds in terms of government policy action coming in. And Angel One, the other stock on the back of news flow, launched a QIP. The stock ended almost 10% higher. Just a couple of laggards today, both on the back of very large block deals. First one, CDSL, Standard Chartered, it was a clean out trade for them. And Aster DM, you did see Olympus go out and sell close to 10% equity out of the close to 19.5% stake that they held at the company. Both of these stocks did not recover in the trading session.
Thanks, Vivek, for that neat summary. So those are all the top movers today. But let's welcome our guests then. We have Mayuresh, Joshi of William O'Neill, who joins us on the show to help us with some fundamental analysis. And we have Shrikant, Chouhan of Kotak Securities to help us on the technical side. Hi, gentlemen, and thanks so much for joining in. Well, Shrikant, you go first. What are you making of this move on the Nifty? It seems we're in this broad band of 350, 400 points. What are the odds we break out on the upside? And today, what do you make of the late surge on the Nifty Bank? Does it have enough now to make a challenge and try to push its way to a fresh all-time high?
Good evening, Nigel. What I can make out is market is stuck within the broader trading range of nearly 700, 800 points. It is but at the middle stage of the entire sell-off that we saw in last few days. Bias is bullish. I'm of the view that the market is heading for at least 22,300 or 22,400 levels based on current technical formation. And today also, when there was correction in the market, we saw good amount of buying support close to 22,100, 22,050 levels. So broadly, I think the markets are still in the range, and whenever there is a correction, we are seeing some buying support. But for the Bank Nifty, it was consolidating, and it is consolidating since last 3 days. So based on its technical formation and the way it recovered in the second half, yes, there are like fair chances that the Bank Nifty will cross the level of 47,000, and eventually we will see the levels of 47,500. So there also the bias is bullish, and we should look for buying them if there is any correction.
Okay. Let's get to the stock of the day, and undoubtedly it was Reliance Industries, the stock gaining 3.5% in trade and ending very close to the 3,000 rupee mark on that. This is after Goldman Sachs reiterated their buy rating, but they raised the target price to 3,400. The report is fairly comprehensive. They've highlighted the various growth drivers across their various business lines. Hormus joins in with the details. Hormus.
4 key important factors that Goldman Sachs is highlighting as the key growth drivers for Reliance Industries. The bull case scenario that they are highlighting assumes a 54% upside by FY26 that comes up to a price target of around 44.95. Now, speaking of the 4 key drivers, the first one is the telecom business, where they're expecting that to become a sustainable free cash flow generating business over the years, and they're expecting Jio platforms to generate a cumulative free cash flow of around $12 billion by FY27 compared to just under $2 billion it has raised over the last 3 years. Speaking of the retail business, they're saying that it is entering a phase of a steady state expansion and rising return ratios, but the margins are unlikely to expand because of the shift in product mix. The oil to chemicals business, which has a multi-year refining outlook, the chemicals business appears to have bottomed, and that Reliance has leverage over the recovery in petchem margins because of the cost advantage and the capacity expansion that it has undertaken. And lastly, in the new energy business, where it says that hyper integration can drive higher returns and that the cash flow generated in the current energy business will be enough to fund the entire capex of the new energy business. They say that the risk reward remains favorable for Reliance considering the run-up that it has had, and they're seeing a stronger pipeline of catalysts going forward. And among the key risks that it highlighted include a lower than expected refining and chemical margins, a lower than expected ARPU, and a lower than expected market share for retail business, along with the margins as well. But a very positive note from Goldman Sachs reflected in the stock price, very close to its record high, is Reliance Industries.
Got it. Goldman believes all the cylinders are firing, explains why the stock today did very, very well. Thanks a lot for that, Hormuz. Well, Mayuresh, coming across to you, someone who has the stock, I guess the recommendation would be to hold on. You could tell me what you think about it. But what about a fresh entry into the stock? And there's another play, the Jio Finance stock. Well, they have a large amount of their share price that comes in because of the Reliance Industries stock. And actually, that's been the outperformer. View on both these two?
I think it's a clear hold for both of them, Nigel. And I think as the trigger points were mentioned, two or three things which stand for Reliance. One, I think in terms of Singapore GRMs, even if they come down, which is the case in the past few weeks, Reliance has multiple feedstock options, which gives it that premium advantage to Singapore GRM. So to that extent, the refining part of the business should be relatively better off compared to a lot of other players into the market in a declining scenario. On the retail parts of the business, again, the expectations in terms of Jio, the telecom part of the business, and Reliance Retail is expected to continue showing a very steady state growth. And my own sense is that at some point of time within this calendar year, you are going to see ARPU increases take place, which probably even strengthens the Jio Telecom balance sheet even more. Coming back to the renewables part of the business and the new energy businesses as well, Reliance has been very categorical in terms of having calibrated investments put through. So they don't want to front load a lot of capex, a lot of investments upfront into all these businesses. And a calibrated approach means that the leverage component does not exceed the standards that they probably set out. And therefore, ROE should remain protected on an overall consolidated basis. For Geo Financial, again, I think the expectations in terms of the foray that they've probably done or expected to do in the asset management business, in life insurance through various products, and the low-hanging fruits in terms of financing through the ecosystem that they probably have within Geo itself and the other businesses that they probably cater to as well. I think all these businesses should fire on all cylinders. So in my opinion, I think one should hold on. Both these stocks meet all the cancelling criteria that we're looking at markets.
Okay. We'll come back to you. Today, shares of Aster DM Healthcare slumped close to about 8% after 9.8% equity changed hands in a large trade. Now, sources tell CNBC TV 18 private equity firm Olympus Capital Asia Investment was a likely seller. CDSL was the other one where we saw a large block deal. Vivek is here with the detail. Vivek.
Well, that's right. So both of these stocks today seeing very large block deals, almost 10% equity in both of these companies changed hands. First, let's have a look at CDSL. Over here, 7.4% of the total equity changed hands via a large block deal. Standard Chartered Bank completely sold out its stake in the company via this particular block deal. The total deal size was a little over $150 million. So it'll be interesting to see who are the buyers in this particular deal, once the bulk deal data comes out later evening. Aster DM was the other stock. Remember, in the context of the company having gone ahead and sold the GCC business to its promoter along with a private equity partner, a very large investor in the company holding almost 19.5% stake has exited almost half of the stake in the company today. So Olympus Capital Asia, that held almost 19% stake, has sold 9.8% stake in the company or 9.8% equity via the block deal today. The offer size, at the lower end of the block deal or at the lower end of the price range works out to a little over 1,950 crore. So both, when you're talking about CDSL as well as Aster DM, both of these stocks slumped in the session on the back of the very large supply overhang.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across to Vamakshi. She's here to tell us about Angel One. They as well are looking at some fundraising plans, and the stock market is very, very excited about that. Vamakshi, take it away.
Well, absolutely, Nigel. When we look at the stock price, the stock almost closed at the upper circle level. It was up nearly 10% today. The company has launched a QIP of almost 1,500 odd crores is what our sources tell us. Now, keep in mind that the company had received an approval from the board as well as the shareholders to raise up to 2,000 odd crores. The floor price for this QIP has been determined at 2,555 rupees per share. And if we compare it to the closing price yesterday, it came in at a discount of almost 7%. Largely, these funds that the company is raising is expected to meet increased working capital requirement, exchange margin needs. They're also expanding their business. They're scaling up the AMC business. They've also invested into a new wealth management subsidiary. Not just that, they will also be pursuing inorganic growth opportunities in the fintech space as well. So definitely they're making all the right moves, and analysts say that the company can plow back its quarterly PAT of almost 270 crores that it made in Q3 into the business. But if the company manages to raise funds all at once, the pace of growth in the market share is expected to be faster for Angel One. So a big positive out there for Angel One, and as a result, the stock surged in trade today.
Okay, thank you very much for that. Let's get back to our guest then. Shrikant, Angel One. Now, this was a star performer of 2023. I think it went up, 150, 200%. It started the year on the back foot. I think the stock has corrected more than 20%. Technically, is there a trade on Angel One?
Yeah, Rima, it was one of the best performer stock, but the weight corrected from the levels of 4,000 to almost 2,000, 2,300. I think it will take time to regain its glory. What I'm seeing on the chart is that we saw one quick pullback because there was like dip sell-off in the stock. But after hitting the levels of maybe 3,000, 3,200, again, I'm seeing the stock to consolidate. So I am of the view that the stock is going to consolidate within the broader trading range of maybe 3,200 and maybe 2,200 on the downside.
Appreciate you joining in, Mayuresh as well as Shrikant, and giving us your view on a whole host of stocks. Thanks a lot, gentlemen, for joining in. For the time being, though, we'll slip into a short break. When you come back, we'll get you the top corporate voices along with some market events that you need to track. Don't go anywhere. Welcome back. You're tuned in to Markets Forward. Well, let's shift focus then to the top corporate voices that we had on the channel today. Cautious but not worried about competition. That's the word that's coming in from Abhijit Roy, the Managing Director and CEO of Berger Paints, speaking about Birla Opus's pricing. Well, Abhijit said that the products were priced at a 5% discount to Asian Paints catalogue. However, he said that he expects volume growth to come down to around 11% due to increased competition.
As of now, whatever we have seen, we are cautious but not worried. I would place it in that manner. We need to keep watching this space, more closely. But whatever so far we have seen, they have introduced certain products. We have tested those products. The quality of it is quite similar to what we have already in the marketplace. Nothing spectacularly different there. The pricing that we have seen, from the leader, it is 5% lower, except for luxury category, in which, it is priced at par with the leader. We also operate at prices which are about 4 to 5% below the leader. So it's matched to our prices almost. Industry, and it is not only in India, it is worldwide, that it takes time. Incremental steps have to be taken. It doesn't happen like in a burst unless the existing players make some mistakes. So in my opinion, therefore, it will be a slow grinding process. It will not be as fast as possibly anticipated. It might be lesser than what the projections have been given. I don't think it is impossible to achieve those targets, but it is highly improbable that the targets will be hit. Now, this year, we expect that with increased competition, this 12% volume growth may become 11% volume growth, sort of.
Okay, meanwhile, Shyam Metallics joint venture Natural Resources Energy has received a letter of intent from the government of Maharashtra for an iron ore block. The firm's whole-time director, Kshitij Agarwal, said that the company is also foraying into greenfield expansion of the aluminium business.
Foil stock is currently comprises of 85% of the entire COGS in the manufacture of foil. This would come down to approximately 75% once we have our own unit in place. We will be adding approximately 1,200 crores to the top line conservatively. And the unit, as I said, would hit commercialization in 2026. So there would be a slow ramp-up process, but by year 2 to year 3, we believe that we will hit the 1,200 crore revenue mark. I can project a volume growth for the next year at a rate of 20 to 22%. Apart from this, we are also adding further finished steel capacity on the cold rolling mill side, which is also a much value-added product. And this would sort of be to a tune of 0.2 million tons. So currently we have a pending capex of approximately 5,000 crores, which goes into 27, 28. So we have approximately over 3 years to complete this capex. We have already commissioned capexes worth 3,000 crores in the last 3 years. And we believe that 24-25, we will be accruing a further capex of 2,000 crores, with major of the capex outlay coming live in the second quarter of the year.
Well, before we wrap up, let's bring you some key market events that you need to track. Sonal is joining us to help us out with that list. Sonal.
Thank you so much for that. Of course, it is the last trading day of this fiscal year as well. So it is going to be the F&O expiry, the monthly one as well. Moving on, it is also the day when 25 stocks will be available for T+0 settlement. It is starting tomorrow. This is the pilot phase. So more additions will follow as well. In terms of EGM, we have Ganesh Benzoplast here. Kesoram Industries will be considering fundraise via NCDs on private placement basis. We have board meet from Sun TV. They will be considering interim dividend. And for global events, where there will be economic data coming in from Germany in terms of retail sales and the unemployment data as well for the month of March. In the US, GDP for quarter 4 will be out and initial jobless claims will also be out, and the price index for quarter 4 will also be something that we'll be tracking.
Okay, thank you very much for that. And the Fed Governor, Christopher Waller, will also be talking about the state of the economy. So that will be tracked. Thank you very much for that. With that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.